welcome to another episode of the TAF Hub. I am Mariama Koli and I'm here with the main host of this particular program. Welcome, Mr. Njai.
Thank you, Mariama. I see that you've changed my designation from a co-host to main host.
Yes, you are the main host.
I'm your co-host.
No. Mr. Njai is moving on as a professional TV presenter now, so I'll make him the main host.
Mr. Mboob is the head of corporate banking at Trust Bank Limited.
When you talk, I listen carefully because of your experience as well. But I've listened to your program, this TAF Hub, and I've learned a lot. I've learned from social housing to affordable housing to the high end. And then also, I remember one of your invitees was very, very, very straightforward and open talking to say, not everybody will have a house. You know, unfortunately, not everybody, even under the social housing scheme, will be able to afford, no matter how heavily subsidized it is. And even though you are trying to avoid the word poor, that's unfortunately where we are, Uncle Tab. If you look at, you know, the Gambia as an economy, I mean, we've been into IMF programs over 9 times since 1984, in and out of them. You know, PRSPs and then the extended credit facilities and all these other things. If you look at, in terms of GDP, percentage average growth, you know, we are striving a little bit between 3 to 3.25 within the past 20 years, compared to sub-Saharan Africa about 4 point something. So we are still even behind the average. And if you look at our poverty index, you know, it's not improving. I mean, in 2010, it was 48.4%. And then recently, I think around 2020, it got to 48.6%. These are realities. I mean, as a country, and poverty, it's unfortunately endemic, and it's more pronounced among youths and women. So these are realities we have to face. We cannot provide housing to everyone. You know, I like the way you're talking about it. I think when you invited Mr. Ta, he talked about, you know, the Provincial Land Act, and then he talked about the state lands and all this other things. And we hope moving towards that end will make it at least cheaper, relatively cheaper compared to the Greater Banjul. But nonetheless, if you look at the facilities and the amenities, even if you were to develop just the basic things that these people can access, would you be able to come up with the amenities that is causing the drift, the rural urban drift? Because people want to be where the youths, they want to be somewhere around the urban areas. So are all development facilities that are really pull factors to the drift going to be deployed to that area? And if they are not going to be deployed to that area, it will be difficult to have civil servants. And if government doesn't work hard to really decentralize some of this working environment, you have everything in the urban areas. All the ministries are here. All the departments and agencies are actually around this area. And you still want to subject poor Omar Mboob to a house way back in behind Wasadu because it's affordable. I have to live there and I have to travel all the way. What are we doing in terms of structural reform, social structures, infrastructure? Do we have a train that will leave? I'm from Farafenni. You know, I would love to be waking up to my father's house and then see all my sisters and relatives and join the train and come over to work, and when it closes, I go back. You know, I wish I have that kind of thing. Unless these infrastructural developments are not in place, trying to encourage people to really move to the rural areas because of the main reason of an affordable land will be challenging. You know, in as much as you want to contribute to corporate social responsibility, and I think now people are changing it to sustainable development partnerships because corporate social responsibility have led to laziness among the beneficiaries. They sit and they enjoy that sense of entitlement, you know, from institutions that are providing this corporate social responsibility. So basically, we need to start looking at sustainable development partnerships where we really look at how can people take ownership and generate revenues that will be sustainable for them to be where they are and still be served rather than just moving towards where these amenities are. And I listened to you talk about the TAF city and how you plan this live, work, and play. So that, can you come up with that kind of a structure where there'll be live, work, and play? It cannot be entirely on a private institution. It cannot be entirely on TAF. It doesn't matter what your commitment to the corporate social responsibility is. So should government chip in? Yes. They should come in terms of infrastructure. They should come in terms of the incentives that will help you. I had you give this classic example of how the government of Nigeria is really working with Dangote in terms of road development. Can we have a formula like that? Unless we take on these issues, really, we cannot be so empathic to the poor such that we subject ourselves, to a negative bottom line. Then the very cause, the reason that of TAF being here will be definitely eliminated because you're going to continue to operate on losses. And then you cannot replace government. People are paying taxes now. It doesn't matter how low they are as a function of their salaries. It may be very high. We must begin to see this mounting debt in government translate into infrastructural developments that the citizenry will enjoy. So unless we start moving towards that end, we will continue to reprofile debt. If you look at it now, we're in a low interest rate regime. Your previous programs, Dr. Sekou Jabi spoke about the 10% and the maximum borrowing of 15% now with 5% on top of the discount rate, which is the monetary policy rate rather, the MPC rate of 10%. That's obviously, Uncle Taf, you may remember there were times when interest rates were around 34%.
Yeah.
Now, what kind of a business could you do to actually earn returns that will pay for your overheads and then pay an interest of 34%? It was a recipe for business failure. And businesses suffered heavily because of the crowding out of the public debt. It's either I give it to you at 30-something%, or as a bank, I mobilize the liquidity and then put it in treasury bill and then maximize my revenues. So it was a difficult moment. Now, if rates are down to this level, certain basic things needs to be done. We've seen treasury bills recently hovering less than 5%. And then we've seen prospectus getting into 5-year bonds. What is government doing? I'm just giving an example to put it into perspective, such that the debt and the excess liquidity that is being mopped up and mobilized from the banking sector and being taken into a longer profile of the 5-year bond, how does that translate into the roads? I live in Brussels. Sometimes I have to stay at work until 8 because I'm trying to see how the traffic, if not, it's bumper to bumper from traffic lights to turntable. How soon and how long could we sustain these things? So this is, in fact, when you take care of the urban area, I listen to your other TAF ops as well, and I look at the urban planning with Uncle Padu Dumbaya, and I'm saying hello to him if he's listening to this program. But these are things we need to address. If this infrastructure is not addressed within the urban areas, Uncle Taf, shifting all over to the provincial area just for the mere purpose of having something affordable wouldn't work.
Putting in cyber crimes and scammers in the picture, what are your processes to authenticate buyers' identities and understanding most of the buyers communicate with you online?
Absolutely. We moved as a bank, I must say this, there were commissions that passed through, and then holes were punched onto systems and processes that we were doing. So as a bank, some of our customers are saying we move from extremely being flexible to actually moving to the extreme end of being over-compliant. But we have a very stringent compliance culture now, since, and then for some of the customers with our bank, they will tell you, in fact, we've been assessed several times by some of the correspondent banking relationships that we have. And then they have really given us nothing less than an A grade in our compliance culture. So, to avoid all this, in fact, onboarding you as a customer, we had made it some requirements that this will be notarized through a notary public where you are. So at least, we need to know your proof of address. We need to know certain evidences, what we call KYC, know your customer. So we do a know your customer due diligence before we onboard you onto our platform, before we onboard you as a customer. And then in authenticating some of these documents, we rely on notary publics. Notary publics in that part of the world are well respected. There are people who had practice, who are professionals, and something like that. So even though we try to broaden the base on who actually authenticates the documents we receive, but that is still happening. And then part of onboarding you is actually telling us what we call the declaration of initial source of funds. We call it DSHOF. In declaring your initial source of funds, it gives us a clue as to the source document of what you are doing. And then also, we also ask for sometimes source of wealth. Where is the wealth coming from?
Yeah.
Is it inherited? Is it through gambling? Is it through, drug trafficking? Yeah. So these things, we have some basic due diligence that we will do that identifies where the sources are coming from. But most importantly, our participants or our customers in the diaspora that are taking up these mortgages are either in legal businesses with tax records that link them to the legal activity they are doing, or mostly employed. So they send us their employment letter, they send us their salary slips, they send us things that are verifiable and authentic. Yeah. So we also have transaction processing. I think the previous episodes we had about Doctor talking about suspicious transaction reporting. Yes. So there are thresholds beyond which, a trigger is, there's a trigger to say any transaction above this amount must be subjected to further investigation to know whether really this is a normal flow or is an abnormal flow in the account, where has the fund come from, what authenticates the inflow. So we are very aware of this. And then we cannot do this independently as a bank, as an institution, but obviously there are, within the banking setup, you have anti-money laundering, counter-financing of terrorism, you have legal and compliance departments, you have transaction monitoring coming into the SWIFT inflow. Yeah. So it's a whole ecosystem of compliance that is required. So I cannot say 100% that it will be covered, but almost a very large percentage. So far, so good. We are comfortable with the customers we are dealing with, based on the KYC and the due diligences that we do before we onboard them as a customer.
Interesting.
Yeah.
Yeah.
Excellent. I want to bring you back, Mr. Mboob, to mortgages, because that's a product that you're doing very well. And we're quite interested. And I'm sure the listeners want to know more. Yeah. What happens if circumstances arises that prevent buyers from completing their mortgage payments? For example, as we know, before COVID hit, you had clients, who are doing well, but some businesses and obviously some employees suffered because of COVID. Yeah. So what happens that, where their finances, have diminished, or they're unemployed, and then they have issues. What do you do, when they cannot complete their obligations?
Their obligations, yeah. Well, in most places, foreclosures and repossessions are very common. But in our particular case, to directly answer your question, we must brag with the fact that the mortgages we structure so far are on record. They are on time. Some of them, in fact, have been fully paid. As, most of them are quite active. I think we have an incident or two where someone was actually faced with this particular example you're talking about. But luckily, there was already somebody else who was standing for a similar product that he needed, and then, it's just a matter of compensating for whatever the previous holder of the mortgage has done, and then having a seamless takeover by another interested party. I think we need to see a lot of reforms. Commercial courts, for instance, need to be institutionalized right now. We need to look at commercial courts. If you look at, even ordinarily, away from the mortgages, liquidating a collateral held by a bank takes years, to really realize into cash. So with the establishment of a commercial court, and then also reforms into the mortgage acts, that will enable banks to quickly repossess this and hold them under their assets, and look for buyers and sell them. Or actually have a third party or a department that looks at only mortgages where they hold them under stock and shift them over to interested buyers. These are key to be captured in this kind of things, at the end of the day. And even if you look at the credit referencing, it's also a little bit challenging. We have the Credit Reference Bureau, which is basically giving you or telling you Omar Mboob has borrowed from Bank X or Bank Y, and then it's active or not active, meaning it's performing or not performing. But it doesn't give you all the details you would like to know probably as a bank to make a realistic judgment of his character in terms of his debt servicing standing and credit score. So these are things that must come. And also even expanding, most importantly, coming up with the right legislation and frameworks to see a deepened financial market where there will be a secondary mortgage market, where there will be exit strategies into getting into the mortgages. They may be primary, but it's important to have somewhere where even someone servicing a certain kind of a mortgage can see an opportunity in walking away from the mortgage, regaining some cash or offloading it somewhere else. Because it's at the development stage right now, we are in the early stages of the mortgage market. We have not seen a complicated case where someone's ability to service the debt has been significantly impaired, and then we could not, remortgage. We could not reschedule, or we could not say an interested buyer. So I think as it develops, we will have more of those cases. But so far, so good. The experience is really good. People are paying their debt and on time. Some have even foreclosed. And then the few instances, as I said, that we had was one or two of them said, look, I'm unable to pay. But luckily someone was standing to say, I want the product. So we made the arrangement to compensate the first holder and then move to the second mortgage holder and say, just you carry on with this mortgage seamlessly.
Yeah, so takeaway on this is that we need to have commercial courts.
Important.
Government, again, if you are listening.
Yes.
And then secondly, to reform the Mortgage Act.
Mortgage Act.
This will really solve this problem, the issue of foreclosures, because it's going to come. Absolutely. Because the more you have, it happens everywhere. Things will come up which were never envisaged. So take away mortgage commercial courts and reform of the Mortgage Act.
Indeed, that's important.
Yeah, and then as a private bank, what is your experience participating or involved in the real estate sector, mortgage, to be specific?
Yeah, so far, as I said, very good, but we are not dealing with all of them. I heard in your previous episodes as well, someone talking about some of the disputes around land and all these other things, and I've also heard from Mr. Tar, where it's mainly coming from, in terms of the freehold, the leasehold, as well as the communal properties. But our experience so far is very good. As I said, I think we executed close to 49, I'm talking of the bank, about 49 of them, and most of them have paid. Some of them have paid, most of them are on time, and then the very few cases we have of inability to pay was very good, and we make decent revenues from it. In fact, I think for the short time we've launched, we made over $12 million from the product. Nice. So our experience so far so good is good, but all I'm trying to say is there will be challenges ahead as the volumes come. Sometimes we talk about when loans are young, they are very nice to deal with. Now, as they grow, they become very stubborn because sometimes there are lots of fundamentals that you look at when structuring this debt. It's so short-termic in view that you get them correct in the first years. But by the time economic unforeseen challenges like, look at COVID, nobody has actually exactly anticipated that this will be the impact. So there was no way someone giving out a loan in 2019 could have predicted that, for instance, tourism will be disaffected, and so on and so forth. So this kind of thing. So as the loans grow, they become more stubborn. But they are relatively young now and within our control. It's like your small boy you can actually control. But when he becomes a big boy, then you have to use other negotiation skills to really get him to where you want him. But that's it. The young loans are behaving, and then we hope it continues this way. The formula is right. So far, so good, despite COVID challenges. So, but we are really not oblivious of the instances where there could be hitches as they grow and as the volumes increase.
That's right.
Yeah, you said actually previously that for your product, you set aside $100 million dollars for this product. Well, I guess it was a pilot project as such.
Yes.
Do your bank have the appetite to increase this? Is it something you want to reveal, or are you considering this?
Yeah, well, I'm not the ultimate head, so but I'll just give you my opinion for being here.
Yeah.
Yes, we have the appetite.
Yeah.
As a bank, we are the biggest, or close to the biggest, one of the largest deposit mobilizing banks. And then a chunk of this, I'll give an example, close to 3 billion of it. These are public information anyway, because our financial statements are public information. If I am to give you the structure of the assets, you know, and also we have about 3 billion lying in treasury bills. That can be more productive.
Which is earning you now
which is earning us on average a single digit. I'm not going to say
digit,
figure,
yes.
but below 10%, obviously, yeah. So if you have the opportunity really to put it into, to underwrite loans that can give you double digits, between 10 and 15%, that was just an initial port size to really test the waters and see, you know, how acceptable it is to the market. But it was not casted on stones. We are very flexible and open to increasing that envelope as long as the demand keeps flowing, and then they also meet our minimum underwriting standards that we require to disburse in this sector.
Excellent. Let's talk about anti-money laundering. What role does your institution play in anti-money laundering? But money laundering is big now.
It's big, yeah.
And at times, actually, it can be a nightmare.
Absolutely.
You know, especially for clients.
Yeah.
You know, clients will come, and then once you go through the process, you know, it can be a nightmare. So what role would your institution play in anti-money laundering?
Big role, very big role for that matter. As I said, our onboarding process now and our compliance culture is so strict in identifying who the customer is. We start by doing due diligences on know your customer, KYC. So we ask for your proof of address. We ask for so many information just to know who are we dealing with. You know, and also we subscribe to very good platforms, the Dow Jones platform. And these are institutions that have specialized in profiling people all over the world. You know, so they will do advanced media. In fact, when you search some of these things and they give you results, you begin to wonder where they get this information from. But that's their area of speciality. So in onboarding you, you know, there are certain processes that we run to know who we are dealing with, most importantly. And then once we successfully onboard you also, we continue to monitor what you do. So we monitor your transactions. We look at the volumes of transactions that you do. We have a whole compliance unit that looks at it. In fact, one thing that Gambians, because you talk about the social media and then the republic of the social media, where people speculate a lot of negative information. As banks, anytime and each time a media house publishes something that mentions our name, by 8:01, the correspondent bank is asking us to respond to that. So there is a lot of speculation out there that has negative publicity and negative impact, not just on the institution, but in the entire country. And this is where, you know, we used to hear responsible journalism, but you wouldn't appreciate how good that is. Because with social media now, somebody is assigned in this, and the banks in the Gambia cannot operate alone. I mean, we operate as part of an ecosystem of banks. In the entire international committee, we are part of SWIFT. So the correspondent banking relationships that we have will also be penalized if they are dealing with a bank that is non-compliant to anti-money laundering and counter-financing of terrorism. So at the end of the day, those negative publicities, you know, as easy as there was fraud at Trust Bank, you know, and then maybe just the grapevines. They don't even get into details to know whatever it's
not
there.
Sustained.
By the next morning, somebody is sitting somewhere in London or in another corner of the world asking you to respond to that. How did it happen? You know, what took place. But so we are highly regulated, not just by the Central Bank of the Gambia, but also we are part of regional anti-money laundering and counter-financing terrorism association like JAIBA, you know, and also, in fact, you'll hear about the FATF recommendations, you know, the Financial Action Task Force. You hear about off-fact blacklisting. You hear about different things. So we have systems that interface with these systems to really tell us who we are dealing with. And then we cannot afford to deal with anybody, for instance, on an off-fact blacklist, because that's going to have heavy consequences in what we do.
No, excellent. You look, actually, Mr. Mboob, let me share my experience in this. Way back, maybe about 10 years ago.
Yes.
Because I served in the board of GPA, the port. I thought I was just, playing my role as a Gambian and being appointed in these boards, government boards. And one of my banks in the UK closed my account because they said I was a politically exposed person.
Yes.
A PEP for serving in a government board.
Absolutely.
So that's political.
Yes.
So again, you are quite right. I mean, these things are underestimated here. And quite often, you will see some people accuse you of something on social media.
Absolutely.
And it has some negative effect.
On the contrary.
Especially not only on individuals, but on institutions like yourself.
Absolutely.
So just by accusing somebody on something that is not sustained, you are not only affecting the bank, but the country as a whole.
Absolutely.
So we appeal to those in social media, but please be responsible. But before you say something out, have the backup for it, the evidence, and you can back it up. Okay, so thank you so much. Let's move on, Mariama.
Thank you so much, Mr. Mboob, for your time and such a very important discussion we had with you. And we hope to have you back on the TAF Hub again. Thank you, beautiful viewers. Till we come your way next week, don't forget to go subscribe on our YouTube channel and follow us on our various platforms with the TAF Hub.
Thank you.
TAF Africa Global presents the first eco-smart city in the Gambia, the TAF City, located between Gunjur and Sifo. It is 30 minutes away from the Banjul International Airport. At TAF City, you will be able to live, work, play, and shop in a healthy multi-purpose community. This vibrant urban environment will meet your everyday needs with commercial, business, recreational, and other complementary services to increase the value of your home. With up to 5,000 units of affordable homes on a 500-hectare land, TAF City will be twice the size of Banjul. Prime location, stunning properties, and amazing discount of 20% for the first 50 buyers. Make an appointment today to secure your property. For more information, please call +220 776233 or +220 376 2333, or you can send an email to info@tafafricaglobal.com. Better still, visit our office at Madiba Mall, Bruford Gardens Estate. TAF City, a green and smart city accessible to all. TAF Africa Global is the first and biggest private real estate developer in the Gambia, with a presence in 7 other African countries. We are launching the development of the first smart and most modern office and retail towers in the Gambia, called TAF Twins, located in the heart of the Canifing Institutional Area and 10 minutes drive from Banjul. TAF Twins is designed to have 5 floors of office spaces ranging from 50 meters square to over 1,000 meters square, 2 elevators, central air conditioning, 24-hour electricity and water supply, with the ground floor reserved for banking, supermarket, restaurant, and coffee shops. For your bookings and reservations, please call now on 376-2333 or 776-2333.